Hello students, Dr. Wang is here recording. In this chapter, we're going to learn how to complete the accounting cycle. So first of all, what is an accounting cycle? Here is a cycle consists of 10 different steps. So we have learned how to analyze transactions and record the accounts get affected, and then we will generalize these accounts and make sure there's a debit and a credit at the same amount. And then we're going to post those journals based on each account. Let's say for expenses, we're going to have all the debits and the credits put together. And then we will prepare the unadjusted trial balance. So basically, that's the initial form of financial statements. Number 5 is to make an adjustment, because when the accounting period ends, we have to upgrade our data. And for some unpaid revenues or prepaid expenses, we have to make an adjustment. And then we prepare the trial balance after adjustment is made. And then we prepare the financial statements like income statement, balance sheet, statement of cash flows. And this is what we have done before from step 1 to step 7. And then in this chapter, we're going to learn how to close it, okay? How to close it, and then we will prepare post-closing trial balance, and this will be our end for this chapter. There's also a final step, which is optional. It's called a reverse recording. Since it's pretty deep, so I'm not going to cover it for this elementary accounting class. So these are our learning objectives. So in particular, we will learn how these temporary accounts should be constructed and how to close them at each time periods. And of course, we're going to identify the steps in accounting cycles, like the first 9 of 10 steps. And also, we will learn how to explain and prepare balance sheet, and not just balance sheet, but also income statement. We will also learn some procedures and some ratios. So just let's roll out. So if we prepare a worksheet and explain its usefulness, so you will see that the worksheet is designed to aid preparation of financial statements and also try to eliminate the errors and mistakes. And also it links all the accounts to their adjustments. And then it will help in prepare our interim financial statements. So that's a bridge between the initial journals and the finalized financial statements. And also, it shows the effect of proposed transactions. So if for some transaction has not occurred, we want to know what happened if the transaction occurs. So we need to get a proposed statement. Well, the worksheet, you need to know, is not a required report unless the financial statements, which are required, and the managers and accountants are obligated to make them and disclose them. So here are the 5 steps to make a worksheet. You need to first enter unadjusted trial balance. This is something we learned. And then enter adjustments, and then prepare adjusted trial balance and sort the amounts to financial statements, and then get the finalized statement of columns, income or loss, and balance columns. So this is a good example for a worksheet. So step number 1, you get this unadjusted trial balance. So once again, from previous chapters, trial balance consists of debits and credits made from all the activities. And you need to put the items in the order, like assets goes first, and then capital goes second, and then revenue, and then expenses. And the most liquid assets will go on the top of the list. And of course, you have a debit and you have a credit. And then you prepare for the adjustments. For example, at the year end, the account receivable would get paid off, the supplies got more purchase or got more consumption, the prepaid insurance got expired by 1 more month, and also the accumulated depreciation got increased by certain amount, so on and so forth. And then you're adding the numbers in part 1 or part 2 together to get part 3, which is called an adjusted trial balance. And then based on the adjusted trial balance, you are going to find the accounts that are in income statements. So those accounts are revenues and expenses. And you will also need to find accounts in the balance sheet or the statement of owner's equity. And these are assets, liabilities, and owner's equity. So the fourth step is to separate them into different statements. So right here, you see the process for doing this worksheet. So you need to make sure you put the adjustment in the right place. So right here is the accounting activities, and that caused some dollar change, and then you just need to put them in the adjustment. So if the company has earned 9,000 fees, then their account receivable will increase because not paid in cash yet, and then the fees earned will also increase. And if the company incurred a $2,000 salary expense, so of course salary expense will happen, and then the accounts payable will increase. And then the company increases long-term debt, so the long-term, so this also will have a effect there, but it does not have anything to do with the items here. Okay, so then you use the adjustments and add it to the unadjusted trial balance to get the adjusted trial balance. All right, so then the next step is to separate the accounts into balance sheet and into income statement. So what makes your income statement? That's the revenue, expenses, and that's it. And what makes your balance sheet? That's assets, liabilities, and equities. All right, and then for this general journal, that's something you have already done. So let me skip that part. And if you want to make an income statement, so this is revenue minus expenses. And if you want to make an owner's equity statement, you will need to find the net income first from the income statement and plug it in to the owner's equity. And then you also need to record capital and withdrawals from the owners. Okay. And once you get the total capital or total owner's equity here, combining income, withdrawals, and the initial capital, you will find the finalized capital. You're going to put it in the equity part of the balance sheet. So now let's find out how to close a account. So basically, the closing process, in that process, you need to reset revenue and expenses and withdraw all these accounts to a balance of 0. All right, so that's very important. If you have $100 revenue, you're gonna make sure it drops down to 0 by adding a debit to it. If you have a $300 expenses, you want to make sure it drops to 0 by adding a $300 credit there. And that counterpart of the accounts will be the closing part. So for temporary accounts, you will have a revenues, withdrawals, expenses, and income summary. All right. And then for the permanent accounts, you will have assets, liabilities, owner's equity. Okay. And the closing process only, you need to remember this, the closing process only applies to temporary accounts. So this shows you how to do the closing. So first of all, close a credit to income summary, and then you need to close the debit in income summary, and also close the owner's equity, and the owner's equity could be divided into capital and withdrawals. Okay, so here is the expense account. So that's basically your overall expense, which is 4365. So these are all debits in your income statement. And then these are the revenues. So when you have a revenue right there, it is credits in your income summary. So what happens here is once you had some expenses incurred, then on the general journal for those items like depreciation, salary, those will be debits, okay? And now during the closing process, we just add a negative to it. So if it's a debit 300, we add a positive 300 credit If it is a debit, a negative 1610, we just add a credit of 1610 to make sure these accounts will drop to zero. So if they drop to zero, that means these accounts are closed. Likewise for revenues. So when you have a consulting revenue of 7850, that's a credit. We want to close it by adding a negative 7850. So this consulting revenue will drop to zero. So for rental revenue. And when you do that activity, so for the closing, there is some credits being added to the expenses, and on the income summary, there should be a corresponding credit, debits, I'm sorry. So here is credits, and here is a debit. And for revenues, since you put some debits in there, and here you need to put a credit. All right, and for withdrawals, how to close it? This is a debit for 200 because the owner just pull out $200 cash from the company's account, and then you just close it by adding $200 positive, and this will be reflected in the income summary. So 200 debit here, so you need to put 200. So this is a credit, and you need to put a debit here to make sure this is a complete journal entry. Okay, so this is a complete journal entry. So when I say complete, it means once there's a credit, there's a debit, or vice versa. And for the income summary here, since you have the net income, which is the overall balance, so you're gonna do another journal entry. So to close this income summary, see you have a net income over 3785. If you want to close it, you want to close that credit by adding a debit. And when you add a debit, there's also a credit part in the general journal. So that will be reflected in the capital account. So through this closing process, you are basically transferring all the debits in the expenses to the income summary, and transfer all the credits in the revenue into an income summary. And then once you get this net income, you're going to transfer this net income into the owner's capital. And also you're going to transfer the withdrawal right here, debits of 200, into the owner's capital, the owner's statement. All right, so even without the closing process, you will still see these numbers will be reflected in the finalized financial statements. It's just the closing process with the income summary is just a process you need to take. Right here, you're looking at a trial balance with all these debits and credits, and some of this belongs to income statement, and some of this belongs to the balance sheet. And remember, if you do the closing, it only applies to temporary accounts like revenue, like expenses, withdrawals, and owner's capital. Okay, so you will see that these revenues are there. So you have fees earned, so that's $79,000. So on the income summary, you will transfer this is $79,000 to the income summary, and here is the credit, and after its transfer is a credit. So what you do there is that for fees earned, you're gonna add a $79,000 debit to make sure these two cancel each other. You see 79 positive, 79 negative, they cancel. And then that amount will be transferred to income summary after the cancellation. And for the expenses, you have two items expenses, and you're gonna close it. You're gonna add a positive to make sure this negative of 56,000 is canceled, and add another positive to cancel this negative 8,000. So after these are canceled, there is a $64,000 debit being built in the income summary. So you see that's transferred. And then you will need to calculate the net income right here, which is revenue minus expenses. And then you also need to close this income summary. So once you have a credit of net income, you will put a debit right here to make sure it drops down to zero. And by doing that, you are actually making the income summary, you are making this income summary drop by $15,000, so it will be recorded here. And at the same time, on the owner's statement, you will see the net income increase by 15,000. So it's like your transfer is 15,000 down here, and you have to close it up there to cancel it up there before the transfer. All right, and then you also need to put the owner's withdrawal there. So this will be $20,000. So of course you're gonna close this $20,000 on this worksheet, and you put a positive 20. So make sure it go down to 0. Make sure it's canceled, and then you have a credit being built over there. So in the capital account, all right. So